From the morning reading, furthering the remarkable nature of Friday's new high on the Nasdaq Composite Index, Monday was nearly as notable. Despite the index closing at a new high, more than 990 stocks declined than advanced. That's the worst breadth of any day at a new high in the index history. The only one that came near was March 14, 2012, with 939 more declining stocks. If the S&P had added a few more points late in the afternoon, breadth on the New York Stock Exchange would have been the worst in history on a day the S&P closed at a new high. Recent days have seen a historic lack of participation, and that's not good for the bulls if we're going to have any kind of follow-through on this action whatsoever. Let's go ahead and dive in. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:14 a.m. Central Time, and I'm recording this in preparation for the market day of July the 21st, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. In our overnight action, it was pretty much go nowhere. In fact, all four broad market indices are so close to scratch as to, the S&P was literally at zero at the time of this cut. In terms of crude oil, it was just essentially scratch, just a teeny bit weak. Euro up about 0.25%. Bonds scratch. Gold essentially scratch. None of these have moved appreciably from their closes yesterday. In overseas action, a little bit more movement. China up about 0.2%. Hong Kong up about 0.5%. Japan up about 1%. Germany essentially scratch, as was the United Kingdom. In terms of macroeconomic reports for today, very, very light week continues, and there is nothing on the U.S. calendar for today. Tomorrow, you have crude oil inventories and existing home sales, and that's it. So we have a super, super light week. Even looking out into Thursday, all I see is a couple yellow flag reports. So very, 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 very quiet week. Obviously, Thursday does have the unemployment claims, and that's it. That's a regular weekly event, though, so nothing surprising there. In terms of volatility, well, we did have a standard deviation move put in by the Russell yesterday. The others were much calmer, and you see volatility continues to be very low. Short-term VIX 11.10. Do note the skew here is starting to climb, and our caution level trigger is 125. It has now climbed up to about 128. If that gets to 135, that is a danger sign. So something to kind of keep an eye on. In terms of our regular daily report, not a lot of changes from yesterday. Still phase 2, trend breaking. We're looking for the establishment of that higher low to be put in. Obviously, we have a higher high in our intermediate term at this point. IBD status, confirmed uptrend, accumulation distribution in C, and a NASDAQ at a C+. GMI index remains with the buy signal with a perfect 6 out of 6. Stock charts decision point did have a change yesterday. The immediate term trend model signal did fire. So we now have on the S&P large caps trend model, all three time frames, a bull signal. On the PMO, we have a short-term bull signal, and the other two signals are still in a bearish mode. And the market posture, position sizing opinions, both are at 100%, so very straightforward there. Intermediate term market forecast, our posture is still at very bullish. S&P 86.8, Dow 85.3, very, very bullish. NASDAQ very bullish. Russell, though, did flip over first day bearish yesterday, and indeed they put in a standard deviation move to the downside. We continue to be concerned about the lack of participation of the Russell in this recent up action. And then the other thing is that we're concerned that the Nasdaq is largely being driven by like one company, it seems like. And here's Google, obviously just absolutely has been on fire. But the broader market, you see the S&P, we are absolutely tickling the top of the range. And in fact, I looked at this yesterday afternoon. I believe this is the third highest close. And intraday, we got very close, only 2 points away from the all-time intraday high. So very, very close to the top of the range here. Obviously, in just a few days, we went from the fake breakout to the bottom side and recovered all the way back to the prior fake breakout before Memorial Day, and have reestablished ourselves back to the top of the range. But this has been with historic lack of participation, as you heard from the morning reading. The Russell, of course, put in a negative day yesterday, and this has been, something of concern ever since we approached this ascending trend channel, and we have never broken that at all, not even a tickle, and really rolled over now. So Russell, the first to roll over, and oftentimes the Russell is the tell in what the broad market does. So we'll look to see if the Nasdaq and Dow and S&P also roll over, much like the Russell has. Now, that doesn't mean that we're expecting this to be a big pullback or any means, but that we would have some digestion and some pullback from this really big move up would not be unexpected. Dow Jones basically consolidating sideways. So that's where we are with that. In terms of the rest of our daily report today, hedge warning status 0 plus. I had a question as to, well, when do you get a 0? Well, a 0 is really a full out bull market with essentially no warning flags. And if you were to think back to the S&P, well, back when we were like this, and you had week after week after week of just basically straight out bull market, that's what a 0 looks like. 0 plus, obviously we're still in a long-term bull market. We even have on the short and intermediate term some improvements now, but this is clearly different posture and a different level of risk in the market. There's a real potential that this may be topping action and that we might be rolling over on the bull market. So there's a number of cautionary aspects that make this a 0 plus as opposed to a 0. Now remember, risk level is different than a prediction for a down move. We're not predicting at this point that we're rolling down. We're just simply saying that there are some increased risk levels to the market, and we differentiate that from what we might have and say something like this, which would almost certainly be a just normal 0 hedge risk level, and you'd be aggressively putting on positions and working them, swing trades, put selling, covered calls. I mean, everything that you have practically in your toolbox is going to be at the fore when you're in these kinds of trends like you had here. Now obviously within those trends you do get pullbacks, but they become just that. They're pullbacks. They're not expected to be full out reversals of the long-term trend. Some of the pullbacks, of course, can be a little bit bigger, but they're usually triggered by some sort of event, such as sequestration or Greece or something like that, and then off they go again until they don't. And that, of course, is the nature of when the bull market comes to the end and the business cycle peaks and starts to roll over into its remaining last phase in the recessionary or bear market phase. So we haven't yet got to that point, but anyhow, just thought I would address what makes a 0 and what makes a 0 plus. In terms of the components to that hedge warning status on volatility base, you can see it's all very, very clear. There are a couple cautionary things here. One, S&P distribution day count is a 5, NASDAQ is a 4. We mentioned about the skew being at a cautionary level with that greater than 125. This was also a warning when we talked about how breadth was so narrow. Well, actually on the New York Stock Exchange, we had well over 300 new lows put in, 494 in fact. So that shows you just how weak the breadth is on this current up move. In terms of intermarket risk aversion indicators, we've got 3 that are flagging risk on, one which is essentially neutral, and one that's risk off but potentially rolling up. In terms of special opinions, option income strategies, VIX is inside the acceptable window. Conditions are acceptable. Cover calls, absolutely acceptable conditions. Consider a 1-to-1 distribution between in the money and out of the money strikes. And then put selling conditions are also acceptable there as well. In terms of sector specific, a little bit of a Christmas tree with some of the weakness that came in yesterday. And remember, we have not a lot of breadth. So what you see is a handful of stocks like healthcare that are doing well, and but others, not so well. And obviously, energy, materials, and telecom, especially, and most notably the first 2 I mentioned there, energy and materials. Materials continue to get hammered, and as does energy. So not a lot of green here for something that would be normally at the top of the range. You would expect this to just be green all over the place, but the breadth just isn't there. In terms of percent change, you look very, very weak numbers here. I mean, they're positive, we take that, but not a lot of real strength being put in yesterday. And you see materials and energy down here at the bottom. Big weakness yesterday. So that should take care of today. As always, we greatly appreciate your feedback, and if you have something you'd like to suggest to us or comment on or whatever, just send us an email at support@falconglobaltraders.com. If you found us on Twitter, retweeting us to your followers or to your stock twits, that's greatly appreciated. And of course, you found us on the YouTube channel, and your subscription or liking us on the YouTube channel is also most welcome. More information, as always, is available at the website here. Disclaimers, as always, hit the pause button if you need more time to review this. And we'll see you back here tomorrow morning before the market opens with the market preview. Good trading.